Hey guys, how are you? Andy Sukhu, founder and CEO of Y2K Credit Solutions. So today I'm here to talk to you guys about a topic, gap insurance. A lot of us don't even think about it, to be honest with you, and what gap insurance is, how it works, why you want to be careful with gap insurance, and also I want to talk to you about how gap insurance ties into your credit and your credit scores. So let's get into it. So we all know, when we go purchase a car. Now, if we're purchasing a car from prime or subprime bank, right? And the prime bank, what I mean by that is that you're getting finance. Let's say you're purchasing a car from BMW or Mercedes, you're getting in-house financing. Now, in order to get in-house financing, your credit has to be at the most top score, right? 750, 760 in order to get a tier one financing from Mercedes. And tier one, they have different tiers. Most banks have 3 tiers. Tier one is where you get the lowest interest rate. Tier 2 is where you get the middle interest rate. Tier 3 is where you get the 3.9% interest rate. Beyond that, if you can't get financing from the in-house financing, they have to send you to an outside bank. And this is where the dealership run your credit 15 times trying to find a bank that will take the loan because your credit score is not at its max. It's not, it's below standard. So they have to find an outside bank. And these banks may be Santander, Chrysler Capital, Ali, Exter. These are the third-party banks, the subprime banks, that they will send your application to get you funding for this car. Now, we all know once you go to a subprime bank or a third-party bank outside the in-house financing, your interest rates are astronomical. They start from 17.9%, they can go to 21.9%. Now, here's the thing with gap insurance. So if you buy a car from Mercedes, we're going to use Mercedes, and let's say you got financing from Mercedes. They're not asking for gap insurance. 1, your credit score is so high, they know you're not going to default on the loan. 2, you're going to pay it off successfully. And 3, you're not buying a car with a high interest rate, so you're not going to be upside down in the loan down the line or when you finish paying off for the car. But you ever notice that when you go to a dealership and they have to get you financing, let's say Capital One Auto or Santander, the finance manager tells you, okay, listen, you have to get gap insurance. And normal consumers are just happy to get into the car. They don't even care. Like, yes, I'll take gap insurance, but do you really need gap insurance, or is gap insurance just another sales gimmick that the dealership is selling you, and actually not paying for the policy? Well, really, it is a sales gimmick. Now, based off of your credit score, I remember I said in the beginning, if you get financing from an in-house financing company, like a Mercedes-Benz, they don't ask you for gap insurance because they know your credit score is high. You're not going to default. You're going to pay the loan off. And also, you're not buying the car at a high interest rate. Right? You're not getting a 21% interest rate. You're getting 3% interest rate. That's a big difference. Now, you go to the outside bank. Now, they say, okay, Santander is going to take your loan. The rate's 19%. And you have to get gap insurance. The thing with gap insurance is it's so sketchy. I don't want to say it's a scam, but I'm also leaning towards that way. And the fact that let's say you have to pay the policy for $3,000. The finance manager puts that into your loan. You pay $3,000. You're financing it. Some dealerships, and actually I can say most dealerships actually don't pay for gap insurance for you, or they pay for X amount of months, maybe 2-3 months. The thing is, you're not thinking about it. You just want to get in the car and drive. You're not asking the dealership, oh, who's carrying the gap insurance policy? What's the phone number? What's the policy number? Those are things you're not asking them because you're so excited about getting the car and getting into the car and driving. This may be your first car. This may be your second car. This may be the car that you dreamed of. Who knows, right? But you're excited to get into the car. Now, let's say down the line, 6 months, 8 months later, a year later, something happens to the car. It may got into an accident or whatever the case may be. And the bank has to pay off the loan, but they only owe, let's say the car is worth $20,000. They're only going to pay $17,000. Your gap insurance has to pay the difference. Now you call the gap insurance company. They're saying, "Oh, we don't have a policy for you. The dealership only pay 1 month of service for you, or we're only going to cover 10% of the balance for you." But that's gap insurance. The dealer said they will cover everything. You got to be very careful with gap insurance, guys. I'm borderline saying it's a scam and it's just extra money for the dealers to put money in their pockets. And because they know you have such a bad credit score or your credit score is not up to par, your credit score tells that there's a likelihood that you will default on this loan in 6 to 8 months. So they're charging for gap insurance. They're not actually buying a policy. They're not paying into the policy. And if they are paying in, they're paying for maybe 2-3 months. And then at the end of the day, when something happens to the car, you're stuck with the bill and you're like, but I thought I had gap insurance. You didn't read the fine prints. So how does that tie into credit score now? Is that in the beginning I said if you went to a bank like Mercedes or BMW and you got in-house financing, because you have a high credit score, they're not asking for gap insurance. So this is another way of dealerships taking advantage of you, that I think is taking advantage of the clients and just charging you for things that they know they're not going to pay. So be very careful. The next time someone says we can't get you in-house financing and have to send you outside to get financing from a third-party bank like Capital One, Santander, Chrysler Financial, guys, run. Don't even take the deal, because trust me, I'm telling you, I've seen it over and over and over and over my client's credit report. It's going to be a bad loan, and you're going to be upside down on this loan. That means the cars, by the time you finish paying off for the car, you paid for 2 cars because the interest is so high. Or 2, by the time you pay off the loan, the car's not worth anything. You can't sell it back for anything. So you're at a loss. So I always tell my clients, if you're going to purchase a car, make sure you have the best credit score. Clean up your credit, take a look at it. Make sure everything is up and up on it so you get in-house financing, because gap insurance is a scam. Look into it, read the fine prints, ask your questions, guys. Make sure you get a policy, because these dealerships are just pocketing the money. I actually did a write-up on it. So this write-up is going to go attached with this video so you guys can read it. All right? If you have any questions, guys, give us a call. Click the link in the bio. Subscribe to the YouTube channel, guys. Tons of content on there for you. If you like it, share it. Maybe someone that's in a situation that needs this advice. Help them out. If you have any questions, give us a call. 516-568-4541. Talk to you soon.